So, sir, without taking much time, I would like to request you to kindly deliberate on the important changes that have been recommended by the GST Council recently and apprise our viewers with respect to the practical applicability and all those litigations that have been uh, tried to curb up by the council in the latest meeting. Over to you, sir.
Thank you, Anmol. I would like to thank Taxo for giving me this opportunity to talk to its viewers about the latest GST recommendations in the 53rd Council meeting. So, as you are aware, lot many recommendations have been made. Many trade facilitative measures have been recommended by the Council. Now, the circulars would be issued, the rules would be amended, and the law would also be amended. As far as law enforcement is concerned, I'm sure you are aware that first the GST Act will be amended, and the amendments recommended by the Council would be introduced as part of Finance Bill in the budget, which will be presented sometime in July. And once it is approved, passed by the Parliament, then all the state legislatures also have to pass the amendments in the respective SGST Act, and then from a date to be notified, the law changes would be brought into effect. So that is a little long run process, but as far as clarifications which are to be issued, all the rules which are to be amended, I am sure it will be done quickly by the GST policy wing or the TRU wing of the Ministry of the Central Board of Indirect Taxes and Customs in Ministry of Finance. Now coming to the recommendations, we'll take topic wise what are the major recommendations which have been made by the Council. So first is with respect to the rate of GST on services, particularly for the insurance sector. So there was lot of litigation, lot of demands which were raised against the major players of insurance sector with respect to the taxability of reinsurance and co-insurance. The term co-insurance means that few companies join hand together to give a insurance, and there was a dispute whether that co-insurance which is being given is to be taxed within that association. Similarly, the big insurance companies are required to take reinsurance from the General Insurance Corporation or from other insurance companies to cover the risk as per the IRDA requirement. So there was a doubt that whether that reinsurance premium, which is charged by those companies, is subject to GST. So the Council has recommended, and with an intention to curb the litigation on the insurance sector, it has been now recommended by the Council that these commissions, the co-insurance commission, the ceded commission, the reinsurance commission, would be treated as no supply, effectively meaning that no tax would be charged on such type of commission, the reinsurance commission, etc. So that will, I am sure, will be a very big relief to the insurance sector. Similarly, earlier, Indian Railways was not paying tax on forward charge basis. The tax was to be paid on RCM basis, whosoever was making supply to the railways. But with effect from October 23, the railways were brought under forward charge mechanism and they started paying tax. So there was a doubt whether the services which are provided to general public, like sale of platform tickets, the facility of retiring rooms, etc., which are available on the railway stations, clock room service where persons can keep their luggage for a short period, whether the GST would be leviable on that. And at some big stations, even the battery operated car services are also provided. So now the Council has recommended that there would not be any tax on such services. So with that, probably the cost on the general public of these services would get reduced. Another issue which was engaging the attention was with respect to the taxation on hostel accommodation or paying guest accommodation service and whether it was subject to GST. Recently, there was advance ruling by Uttar Pradesh and Karnataka Advance Ruling Authority that these services will be subject to GST. The council has now recommended that if the amount of rent which is charged by these service providers up to 20,000 rupees per month, and if the accommodation is had for a minimum period of 90 days, the benefit would be given and no GST would be leviable, and the notification number 12 of 2017 would be amended accordingly. Then there was a doubt whether the services provided by RERA is exempt or is subject to GST. It is proposed that it would be notification would be amended so as to provide exemption to RERA. Now coming to the litigation part, lot many beneficial changes have been recommended by the council with respect to this item of work in GST, and because the scrutiny of the returns, the audit, etc., were started recently, and there was a flood of show cause notices, the orders, appeals, etc. So to give relief to the taxpayers at large, many recommendations have been made by the council. So as I said earlier, some of the recommendations would be implemented by way of amendment in the act, which will take some time to be brought into effect, because they can be brought into effect only with effect from a date to be notified after the CGST Act and the respective SGST Acts are amended. Then there are certain circulars which would be issued shortly. I hope that they will be issued shortly. So with reference to the issuance of show cause notice, presently we are aware that there are two time limits. One is 3 years under section 73 for normal period, and 5 years for under section 74, where the extended period can be invoked. And these 3 years and 5 years are counted from the date of the filing, due date of filing of annual return. So always there has been dispute whether there is an element of fraud, misrepresentation, etc. And it is always, the show cause notices are issued, but at times the taxpayers claim that there is no such element. The department tries to allege that there is a fraud, and there is always a dispute whether 74 can be invoked or not. To my mind, with the aim of resolving the dispute at the threshold, a new section 74A is recommended by the council, wherein the distinction between the 74 and 73 would be done away with, and the time limit for issuing the show cause notice in respect of demands from financial year 24-25 would be the common time limit. No distinction of 3 years and 5 years, and probably the recommendation is that the time limit should be 4 years from the due date of filing of annual return. And similarly, presently also the benefit of paying reduced penalty is provided both in 73 and 74, that if the tax is paid within 30 days, then the penalty amount would be reduced. Now that 30 days is proposed to be amended to 60 days. But as I said earlier, this would require amendment to CGST and SGST Act by way of insertion of section 74A. That is what has been recommended by the council. The viewers may be aware that under Customs Act, under the Central Excise Act, and under the erstwhile Service Tax, which is governed through Chapter 5 of the Finance Act 1994, there were monetary limits below which the department was not permitted to file appeal, and that was in tune with the national litigation policy of the government at a broader level. There was no such monetary limits in GST. Now it has been recommended by the council that the similar limits would be there in the GST law also. So what has been recommended is that for filing appeal, the monetary limit is 20 lakhs in GST tribunal. In High Court, it will be 1 crore, and in Supreme Court, it will be 2 crores. In other words, if the amount of tax involved in the dispute is less than these limits, 20 crore, 20 lakhs, 1 crore and 2 crores, the department will not be allowed to file appeal against the order which are in favor of the taxpayers. While taxpayers can file their appeal if they are aggrieved, even in those cases which are below this threshold limit. So this will reduce the litigation from the government side to a considerable extent. Pre-deposit has been good, has been bad. Those who are not able to file appeal because of the lack of funds which are to be deposited as a pre-deposit, they often criticize this provision. But generally, it is felt that this reduces the time of litigation, particularly at the commissioner appeal level or the first appeal level or the second appeal level. So there were amounts which were prescribed for first appellate and the second appeal level. Now the council has recommended to make changes. So as far as first appeal level is concerned, the council has recommended that the maximum amount of pre-deposit which is to be deposited should be reduced from 25 crores each under CGST and SGST to 20 crores each, while the limit of 10% remains the same. As well as appellate tribunal is concerned, that means the second level of appeal, earlier 20% was required to be paid and with a maximum of 50 crores under both CGST and SGST separately. Now it has been recommended that it should be reduced to 10% with a maximum of 20 crores and 20 crores under CGST and SGST. This would require amendment in section 107 and 112 of the CGST Act and the respective SGST Acts. So therefore, this change would come to be in play after a short time when all the acts are amended. Now, as we are aware that the president of the GST tribunal took oath on 6th May 2024, and as per the present provision in the law, the time limit starts the day he enters office. That 3 months time limit starts from that date. But because there is no other appointment has been done for member judicial, member technical center, member technical state, so therefore there were concerns that and even there is no registry of the GSTAT. So how the appeal can be filed, whether the 3-month time limit has kicked in. Even in the preamble of the orders passed by the first appellate authority, it was mentioned that the time limit starts from the date the president enters office. Now it is proposed that the council has recommended that the law would be amended and 3 months would be counted for filing appeal from a date which is notified by the government. So therefore, there is no hurry now, or there is no one should not panic that because the time limit has kicked in from 6 May 2024 and we are not able to file appeal, will it get time barred, or whether we'll be able to file or not to file the appeal? Probably that concern should be addressed. As far as this provision is concerned, I would like to tell my viewers, the viewers of Taxo, that this provision can be brought into effect immediately to GSTAT. All the provisions which are there only in the CGST Act. No similar provisions exist in the SGST Act. The SGST Act contains provisions that the provisions relating to GST tribunal are borrowed from the respective provisions of the CGST Act. So therefore, once this is passed by the parliament and the president give assent, probably this provision can be notified by the government immediately. And this requires immediate notification also in any case. Otherwise, the 3 months period is already running from 6 May 2024. Then there were concerns about whether the amount deposited during investigation through DRC3 or otherwise before filing the appeal can be regarded as pre-deposit or not. There were concerns. Some appellate authorities were accepting that amount deposited through DRC as pre-deposit, while others were not. Now the council has recommended that Rule 142 should be amended so as to expressly provide that the amount deposited through DRC3, either during the investigation or otherwise, should be treated as pre-deposit, and the requirement of pre-deposit laid down in 107 should be will be treated as complied with, even if the amount is deposited through DRC 03. Then there is a relief for e-commerce operator who are required to collect TCS in respect of supplies made through them by the suppliers of goods or services. Presently, they are required to collect TCS of 1%, 0.5% under SGST, and 0.5% under CGST. Now that amount is proposed to be reduced to 0.5%, that means 0.25 both under CGST and SGST Act. This provision would ease the working capital requirements of the e-commerce operator as well as the actual suppliers through such e-commerce operators. Then in the next section, I'll talk about the valuation of supply under under the GST Act. First is with reference to the valuation of import of services. There has always been doubt what should be the value of import of service from a related person, where the recipient is eligible to avail the full input tax credit. So there were disputes. Litigation was being raised because there was always a difference of view between the departmental officer and the taxpayer with reference to its value. Now it is proposed, it is proposed and it is recommended by the council that the value declared by the domestic entity uh, in respect of the import of services from its related party from abroad would be the one which is declared by that domestic entity, and that would be treated as open market value if the domestic entity is eligible to avail the full input tax credit. And as you are aware that the domestic entity is required to pay GST on RCM basis and can avail the credit in the same month in which they are discharging the liability on RCM basis. And RCM liability has to be discharged on cash basis. So this will, on the one hand, will reduce the litigation, and on the other hand will also uh, reduce the working capital requirements of the domestic industry. The next recommendation which has been made by the council is with reference to the valuation of corporate guarantee in case of again between the related party. And it is now recommended by the council that the rule 28(2), which says that the value would be 1%, that would not be applicable in case of in such cases where the corporate guarantee is provided between the related parties. Then with reference to the place of supply, one major recommendation has been done, and that will be very beneficial to the banking industry as well as to the FPOs, the foreign portfolio investors which are making investments in India. So there were disputes. What is the place of supply where the custodial services are provided by the banks to such foreign portfolio investors? There was a view that it is not export of service because the custodial service is provided in India, where the shares or other securities are kept in the as a by the banks as a custodian. Now it is proposed and recommended by the council that the place of supply in such cases would be governed by section 13(2) of the IGST Act, which means that the place of supply in such cases will be the location of service recipient, that is in the foreign country. And because the place of supply is outside India and the consideration which is paid by such FPOs to the banks is in foreign currency, then it would be treated as export of service and banks would be eligible to avail the refund on account of export of services. Then a major relief is provided to the taxpayers with reference to the demands etc. raised by for the financial year 17-18, 18-19 and 19-20. In some of the cases, because the scrutiny of returns has started late, all the audit were done late. So in large number of cases, the interest amount and the penalty was much more than the tax which was involved in such disputes. And lot many disputes are because of the procedural issues also, like it was not there in 2A, while 2A was introduced from 2020. 2A was made mandatory after a later date, but still demands were made. Mismatch between 2A, 3B. So now what has been recommended by the committee, that by the council, that section 128A would be introduced in the CGST Act as well as the respective SGST Acts, so as to provide that the interest and penalty would be waived if the taxpayer pays the tax amount up to 31st March 2025. Now we may be wondering why 31st March 2025. Again, I come back to the same issue, that this requires amendment in the law, introduction of section 128A in the CGST as well as the respective SGST Acts, which will take time. And this amnesty scheme will be introduced by way of amendment to the Act and not by way of a circular or by way of a notification. So therefore, it will take some time when the law comes into force, and therefore 31st March 2025 is recommended by the council. So now the taxpayers and the consultants like us, like you, should now review the positions, whether what is the merit in our case. So if there is a merit, then probably one should continue to litigate with the hope that in the appellate forum will win. But if we don't have much arguable case, probably the better course would be to avail the benefit of this amnesty scheme. But that one can take a view only when the section 128A as will be introduced in the finance bill, that comes into being, and we come to know what are the basic contours of the provisions of the amnesty scheme which has been recommended by the council. And this is for first 3 years of the GST, 17-18, 18-19 and 19-20. Another issue was with reference to the late filing of return, even when the amount which was to be paid through cash ledger was lying in the cash ledger, but because of some reason one could not file the return up to the due date of 20th of the following month, or in some cases 22nd of the following month. So what happens in that case? Presently, according to section 50, read with rule 88B, the amount lying in electronic credit cash ledger was not being considered as the amount available with the government. Now it is, and then recently the Madras High Court, Honorable Madras High Court in the Eicher Motor case has said that that amount which is lying in the electronic cash ledger should be considered while calculating the interest on the tax paid even through electronic cash ledger. So now the council has recommended that rule 88B should be amended so as to provide that while considering the default and default amount, the amount lying in the electronic cash ledger would be excluded. So that means if some amount is lying in the electronic cash ledger but could not be debited because of late filing of return, the interest thereon would not be calculated to that extent. So that would be done through amendment of rule 88B. That is what has been recommended. Another major recommendation and big relief to the taxpayers is with reference to the Section 16(4) of the CGST Act. Now, as you are aware that with effect from 1st October 2022, that means for the financial year 21-22, 16(4) was amended, and it said that earlier the time limit for availing ITC under Section 16(4) was last date of filing of return for the month of September. That means 20th October. The law was amended with effect from 1st October 2022, that now the last date to avail is 30th November 2020, 30th November of the following year, which effectively meant that now the return through which the credit could be taken in respect of invoices of the previous financial year was of October. So, and the October return, even if it is filed after due date, that is 20th November, but it is filed before 30th November, the tax and the credit could have been availed. But that was for the financial year 21-22. So now what has been, and then there was a decision of Kerala High Court in M Trade Links which said that this recommendation was procedural in nature and it should be effective from right from 17-18. Effectively, M Trade Links had said that even for 17-18, 18-19, 19-20 and 20-21, the time limit will not be last date of filing of September return, that is 20th October, but it should be 30th November. Now, what has been recommended by the council is that 16(4) should be amended with retrospective effect, and the last date for availing credit under Section 16(4) for these 4 years would be up to 30th November 2021. So, that is what has been recommended by the council. Again, as I had mentioned earlier, this requires amendment in the Act, and therefore the CGST Act as well as the SGST Act would be recommended. But what is the net effect of this provision would be known once it is introduced in the finance bill as part of the budget. Again, we have to review the position which we had taken earlier in the light of this proposed amendment as per the recommendation of the council. Another relief with reference to 16(4) was is what has been recommended is that where the registration was cancelled and it was revoked, but obviously one cannot file the return during the period when the license was cancelled. So now the council has recommended that 16(4) would be relaxed in those cases where the returns are filed by the taxpayer whose registration cancellation has been revoked. If the returns are filed within 30 days of the order of revocation, then the condition of Section 16(4) would be relaxed. Again, this will be amendment with retrospective effect, and 16(4) of CGST and all the SGST Act would be amended. Another litigation issue, a big litigation issue, was with reference to the ITC of the tax paid on RCM basis. So suppose if I was supposed to pay some tax in the year 18-19, but I missed to pay that tax. Now because of the scrutiny of return or because of audit or on my own account, I discovered today that I should have paid in 18-19, but I forgot. I pay today. So there was a dispute because this liability was for the year 18-19. Can I take the credit in the current financial year? The trade industry felt that we can, but the departmental officers has another view, and their argument was that it was for a prior period. So now it has been proposed to the GST Council has recommended that the Section 16(4) would be relevant for the year in which the tax is paid on RCM basis. So that means the tax of 18-19, if it is paid in 23-24, the last date to avail the credit would be 30th November 24 and not 30th November 19. So that is a big relief. Now what happens to the time of supply? This is only with respect to the credit that I can avail during the current year. But as the liability was during 1819 and I am paying now, to my mind, the interest liability will have to be discharged because of the delayed payment on RCM basis. The tax was due in 1819. The tax is being paid in 23, 24 in our example. So interest for the intervening period has to be paid. But clarification for the telecom companies have been is proposed to amend section 17(5) that deducts and main holes will not fall in the blocked credit. Coming to returns, again major reliefs have been provided, some of which are that GSTR 4 for the year 24-25, that means the next year, the last date would be 30th June instead of 30th April, because 30th April is very close to the close of the financial year. Then has been a demand from the taxpayers that they should be allowed to amend their return. I think a small beginning has been done by proposed implementation introduction of GSTR 1A, that means amendment to the statement of outward supplies. What is proposed is that the amendment in 1 can be done through 1A, but before filing of 3B, and therefore the combined effect of 1 and 1A would be reflected in 3B. So this is a small beginning, and probably with passage of time and with the benefits which one would assess through the introduction of GSTR 1A would encourage the amendments in the remaining returns also. Then, like every year, the annual return would not be required to be filed by taxpayers having turnover up to 2 crores. GSTR 9 will not be required to be filed for financial year 23-24. Presently, in GSTR 1, the B2C supplies, if the value is more than 2.5 lakhs per invoice, it is to be, details are to be entered. But now it is recommended that this amount would be reduced to 1 crores. That means in the GSTR 1 of the B2C section, the invoice having value of more than 1 crore, the B2C supplies will have to be entered in GSTR 1. So as far as TDS return is concerned, earlier when no TDS return in GSTR 7 was to be filed if there was no TDS in a particular month. Now it is recommended by the council that irrespective of whether any TDS has been deducted in a particular month, GSTR 7 has to be filed. Then some trade facilitative recommendation have been made with reference to the refund also. So today I export on payment of IGST on the value declared today, but subsequently the value of export increases because of the amendments in the between me and my importer located abroad, and because there is an increase in value, I have to pay more IGST. There was no provision for claiming refund thereof. Now the council has recommended, and in such a case, IGST refund of IGST amount paid on the differential value due to increase in the export proceeds would also be eligible for refund. Then, as we are aware that where the export duty is leviable, the refunds are not allowed. Now the council has recommended that even the IGST refund would not be permitted in such a case where the export duty is uh, is leviable. Then anti-profiteering has been a big bane. The taxpayers have been saying that this provisions is anti-trade. Now the council has recommended that post April 1st, 2025, no new application with respect to anti-profiteering would be uh, taken, would be taken. So that means the sunset clause is 31st March 2025. Another recommendation is that instead of Competition Commission of India, the cases would be handled by GST and not by the Competition Commission of India. Then Aadhaar based biometric Aadhaar authentication for obtaining registration is presently in operation on pilot basis in few states. Council has recommended that it should be done pan India, and the registration now should be biometric based. Then there is one recommendation with respect to the transitional credit for the ISD, Input Service Distributor. There was a dispute. Now the recommendation is that the invoices which were issued prior to 30th June 2017 but received by ISD subsequently, the transitional credit can be passed on, availed and passed on by the ISD, and for that section 140 subsection 10 is proposed to be amended. Then there are a large number of circulars which are clarificatory circulars have been recommended. So we'll see those circulars. And the last amendment is a big amendment in the form of section 11A, which I want to talk. So presently there is no power to the government or to the council to recommend not to levy or not to collect the tax when the tax was not being paid as a matter of trade practice. The viewers may be aware that such a provision existed in the Central Excise Act as well as in the Customs Act in the form of section 11D, where the central government had the power to not to collect the tax where the tax was not being paid as a matter of trade practice. Now, the similar power is proposed to be given to the council in the form of section 11A, and again this will require the amendment to the act, and it will come into effect in due course. I think I have covered the major recommendations.